Hello and welcome to Stockwatch Live. Now, as we draw towards the end of the year and start to take stock of how the past 12 months have fared, it's safe to say that 2018 has seen its fair share of corporate doom and gloom. The restaurant and retail sectors have suffered as shoppers have reined in their spending and bought whatever bargains they have bagged online. Just coming up to a year ago when Stockwatch launched, in fact, we opened with a mention of the potential decline of the retail sector. Times were already tough, with a number of high-profile casualties, Woolworths and BHS to name just two, sending shockwaves through the sector. Things were far from rosy for retailers, and back then the Centre for Retail Research estimated that we would see the number of shops across the UK fall by 22% in 2018 alone. 12 months ago, that seemed extreme. Today, it's starting to look modest. The current true picture will really start to emerge as we go into 2019 and get the first of the trading updates after the all-important festive trading period. But for now, I think it's fair to say that it seems like barely a week has passed without at least one retailer warning about falling sales and a drop in profits. And these warnings have come from retailers of all shapes and sizes, both high street stalwarts and fresh-faced newcomers, and those reliant on actual footfall as well as those operating in cyberspace. From John Lewis and Marks & Spencer to Boohoo and Superdry, they've all faced their demons and felt the consequences come rain or shine. There have of course been the standouts, the likes of Hotel Chocolat, Joules and, somewhat surprisingly, WH Smith have found their niche and bucked the downward trend. Adapt or die has become the mantra in 2018, and those that found theirs have shown others how it should and can be done. There are barely a handful of companies reporting between now and the end of the year, but the one notable one is Begbies Trainer. While much of the focus has been on consumer spending, or rather lack of it, this week's Stock to Watch comes at things very much from the opposite direction. Retail and mid-range restaurants have, without a doubt, had one hell of a year, but as they say, every cloud has a silver lining. Cue insolvency practitioner Begbies, which posts half-year results on Wednesday. Of course, where there are losers, there is always a winner, and this company, which specialises in business recovery, could very well see its star rising, along with its share price. The fact is that bad news, of the sort we've seen of late in so many of the consumer-focused sectors, can translate into an upturn in the fortunes of insolvency practitioners like Begbies in times like these. Often derided as corporate undertakers, or worse, vultures hovering over the carcasses of weakening businesses, Begbies hasn't had an easy time of it itself. Despite the economic picture never having fully recovered 100% over the past decade, Begbies shares have failed to set the world alight. They crashed by almost 90% after the 2008 financial crisis, simply because, ironically, not enough companies had hit rock bottom and had the need to call in its services. A lower for longer interest rate environment and patient creditors and investors has meant a make do and mend climate has prevailed, enabling ailing companies to stagger on, all of which hasn't done any favours for Begbies' bottom line. However, the tide could be turning. 2018 has seen trouble on the high street from shops to restaurants. Wholesalers and distributors have all felt the chill winds that have seen shops and restaurants disappearing from our high streets up and down the country over the past 12 months. Begbies Trainer's Red Flag Alert has been measuring and reporting corporate financial distress since 2004, providing an industry benchmark of the underlying health of companies across every sector and region of the UK. Back in March, it had spotted an 8% hike in struggling UK restaurants, with just over 11,000 experiencing significant financial distress. In October, its Red Flag report had identified 469,000 businesses overall that were also in significant financial distress, a 5% increase on the same period last year. It's fair to say business has been a little more brisk at Begbies of late. For the year to the end of April, pre-tax profits nearly quadrupled to £2.3 million, £2.1 million of which came directly from its business recovery and financial advisory activities. As a result, the company was able to raise its annual dividend for the first time since 2011. Now, part Grim Reaper, part turnaround solution provider, it's tended to be a certain type of investor who's put their money into companies like Begbies in the past. However, they could prove to be a good hedge for any investors who fear that the rout we've seen in the retail sector and elsewhere in 2018 isn't set to vanish into thin air as the clock strikes midnight on the 31st of December. Well, that's it from me for this week, and in fact for the year. We'll be taking a break as the company reporting season comes to a close. But we'll be back at the start of January with the first round of results of 2019. In the meantime, have a very Merry Christmas. Thanks for watching and see you in the new year.